Good afternoon, welcome to GrainTV. It's November 19th, 2013. I'm Logan Burgess. To my right here is Brock Shimano to help break down the action that we saw in kind of a mixed day here once again in the grain market. Let's jump into fire tip and see where we closed out the trade session. Corn was up 5 3/4 on the December contract. January beans down 11 1/4. Chicago wheat picking up 8 cents. Kansas City wheat up 4.5 cents. You know, yesterday we saw some weakness out of corn and some strength out of soybeans. Certainly a little bit of a turnaround Tuesday there for corn and beans. Brock, what was kind of the action that we saw today from a technical aspect there on beans?
You know, if we take a look at the daily chart here for the January contract, you can see that last bar. We did have a slightly negative day here today. You know, that's kind of be expected after we saw a little bit of a run up yesterday. Soybean market's still been searching for a little bit more of a direction. We did get some technical support around the 200-day moving average. That was right around 1274.5 today. We did finish the day at 1276. So I look for that to continue to hold.
Yep.
Hopefully we get some better fundamentals, maybe push us back up towards that $13 level. But you know, today we did get a little bit of selling pressure in the soybean market. Something that could have supported us just a little bit was an export sale to China. We saw China buying 240,000 metric tons. We didn't really see it affect this contract. That's because it was for marketing year 14-15.
Yep.
So we did see a little bit of support into that November 14 contract. But you know, we'll have to continue to watch this 200-day moving average right around that 1274.5 level.
Yep.
As we move forward.
Yeah, you know, I guess in my mind, it wouldn't be surprising if we could see soybeans make a run at some of those pre-report lows that we saw. Certainly on the November 8th WISER report, a lot of the strength seemed like it came from tighter than expected world ending stocks. In general, U.S. ending stocks came in line with trade expectations. So it certainly seems like the bears, for the moment anyways, have a little bit regained control of this bean market. We'll have to keep an eye on the demand side, as you said, Brock, export sales here moving forward, and those NOPA crush numbers that we won't be getting out here, though, for about another month. If we take a look, though, at what we saw in corn and wheat today, not really a lot of substantial new information in the market to help push the trade higher. We've really seen corn and wheat futures really hammered here over the last 2 weeks or so. So it seems like we were in some areas where we found some technical support, and that's kind of what we saw today. A little bit of a short covering rally maybe. As we know from looking at the commitment of traders data right now, the fund traders are extremely net short this corn market. So the environment's kind of ripe for a short covering rally. Certainly, though, the fundamentals remain relatively bearish for this market. I think we've talked about it a little bit here. Wouldn't be surprised if we could continue grinding lower there, close to $4 a bushel. You
know, for both corn and wheat, we both hit technical resistance areas. For corn, we were right around that 420 area. That was support on the way down, if you recall.
Yep.
This could be a situation where that's going to be a roll reversal, where it can now be resistance on the way back up. For wheat, we did hit 650 on the Chicago contract. That's going to provide some resistance here moving forward. And something to note on the wheat market is that we did miss another tender going to Egypt. Russia beat us out on that once again, so it continues to show that our prices are not competitive on the world front. We need to bring them down a little bit, or the dollar index needs to come off rather sharply to counteract some of those weak exports that we've been seeing here over the recent time period.
Yeah, certainly. Well, you know, we'll certainly have to keep an eye on EIA ethanol numbers out tomorrow. As we know, in general, we've seen very strong crush numbers reported here the last several weeks. The corn market, though, hasn't been getting too excited about those yet, as we have kind of this dark cloud hanging over corn demand, which is the EPA's final ruling on 2014 ethanol mandate. So we'll keep you posted on that situation here moving forward. But as I said, EIA report will be out tomorrow, and certainly the corn market will be keeping an eye on that. In general, that's what we saw here for a Tuesday in the grain market. Relatively weak for beans. Corn picking up a little bit of strength. We'll see if it can continue in tomorrow's action. Thanks a lot for joining us. We'll see you then.